All right, good afternoon, people. How we doing out there? We got Ready Set Crypto lighting up the lights, lighting up the pipes here. How you guys doing out there today? Bitcoin crash today. What is going on? We thought we'd light things up today to kind of help you through this move and help you understand what is happening, what you can do about it.
First, where are you coming in from?
Yeah.
How's everyone doing? Hopefully not from the pits of despair.
No pits of despair. So yeah, once you get logged in here, just go ahead and tell us where you're coming in from today, just so we can get everybody sort of corralled together and pointed in the right direction, and then we'll be in and out of your here in just a few minutes here, just to give you a little bit of guidance in terms of what we see going on. And we've been through this before. We'll share with you how we handle these types of things.
Many times we've been through this. So
okay,
crypto veterans, this is an old hat.
Right. So we have Cape Town, we have Vancouver, Canada, we have Miami, we have Washington, D.C., Chicago, Florida. Does Florida count as a defunct pit of despair? Depends on whether you're on the East or West Coast. San Francisco, Detroit, Nigeria, New York, Romania, Kansas, Double Brandy, Turkey, and maybe Wild Turkey, Bryce Canyon, Utah, Honolulu, Michigan, Roger from Norway, Wolverhampton. I love that name. Seattle, Germany, Lebanon, Bangalore, the city they named a torpedo for, Alcatraz. Outstanding. No kidding, my grandparents used to live in Alcatraz. Middle of the ocean, New Hampshire, as opposed to Old Hampshire. Fort Hood, Chicago again, Augusta, Georgia. France, we have two from France. We have Toronto. All right, fantastic. Folks, thank you very much for showing up here today. Hopefully we can provide a little bit of guidance here. Again, we're no different from anybody else. We don't know what's going to happen in the next 5 minutes any more than we do what's going to happen tomorrow. But we've handled these things before. There's a very specific way that we handle market moves like this. Very logical procession. And if you're emotional about these things, you will come out in the same place as the rest of the retail traders. And we want to help you separate yourselves from those folks.
So I think it's pertinent for us to answer 3 questions today. What's going on, what we're doing about it, and what you should be doing about it. And I think in less than 30 minutes, we'll be out of your hair here. You'll walk out of this feeling a little bit, a little bit lighter if you're panicking right now, or, if you've got some strong convictions, hopefully they'll be stronger. We'll see. But let's start it off by, first off, if you could go ahead and hit that like button. It just helps us beat the YouTube algorithm. It's always trying to beat us down. So we really appreciate it. But let's dive into what's happening today. What's going on? Why is everyone panicking? Why is the market selling off? What is going on? Like, is it really Elon's fault, or is there something bigger going on right now? I think that's what we should first address. Doc, what's your sense from at least the equity market side of things? What is driving it from outside of crypto? And I can kind of talk to the inside of crypto perspective.
This is kind of what we talked about last week. We went over reasons why the equity market was getting a little bit shaky. I think there's some, again, I don't want to get too religious here, but I think there's some uncertainty that's out there with the market. There's always jitters when you get a new administration coming on board, and like, do they know what they're doing? We have, a new Treasury Secretary, which used to be an old Fed FOMC president, right? So you'd think that the market would have some sense of certainty with what's going on. Not necessarily the case right now, because we're seeing inflation hit and kick in really strong. And this is causing all of the growth assets like tech stocks and anything that's a high beta stock to get sold off in favor of things like banks and energy and there's a huge rotation. So a lot of these companies like energy and banks have been in the dumps for years. I mean, especially with energy not doing very well and, banks running at 0% interest rates, things like that. There's no margin for them to run off. All of a sudden, there's a big attractive use case now for banks and financial institutions and that. So there's a whole bunch of upheaval going on in the equity markets. And unfortunately, when that hits, it's the tail wagging the dog when it hits the crypto market, because when there are margin calls, redemptions, things like that, the first thing that people will do is sell your assets, sell your winners so you can come up with cash and handle and stay in business. Really, it's all about staying in business. So this is going to hit the crypto market, even though we've all talked about crypto being a hedge against inflation. This is going to be hitting these markets short term. Go back and look at any market crash over the last 20 years. Every time the market has crashed, you've seen gold get thrown out the window as well too, but it's the first one that recovers. Same thing with crypto or any other asset which is of limited supply. So we have that going on in the equity markets. We have uncertainty, and it's sort of rippling into crypto.
Yeah, I think well said. I think there's a lot of, at least from like how the treasury markets see it, there are definitely concerns about higher inflation expectations and higher yields, and that's going to lead to a sell-off of those, tech companies, those kind of fringe assets that are, definitely not as stable as some of those blue chips that, the Warren Buffett types are used to. But I don't think normal people kind of see it like that. I think people see the structural problems going on right now, at least as it relates to the base effects of, the fluctuations from reopening demand. Everybody's trying to get the economy moving forward again. We're trying to get out of this 2020 funk. And I think we're still suffering in a lot of respects because of that, at least as it relates to herd mentality. The same people that went out and bought toilet paper and the same people that went out and, filled up shopping bags full of gas last week are the same people, or at least same kinds of people, that are selling BTC right now. They're the ones that are the first to panic decision anything. And so we can't conflate the overall market, rigidity with the panic decisions of some of these people. What is different this time versus 2018, 2017, that sort of lead up and then crash, and then the 3-year period where crypto was just kind of in the dumpster for a little bit there was, and I don't see enough people talking about this, is that at the time the stock market was doing pretty well. So you had every reason to be in equities, and you had not that many reasons to be in crypto. But that is kind of, the script is flipped a little bit. We're seeing cryptos kind of dominate a lot more of market trend. We're seeing a lot more institutional money in the game right now. There's still a lot of reasons to be in the space. And just because we've seen some negative news and some negative press and, there's been some volatility, that's not a bad thing. Volatility is a feature, not a bug in this space. Volatility is indicative of a free market, which crypto is pretty much the best of being, at least compared to the equity markets, where we had a sell-off like today. They had shut it down, sent everybody home, say, come back tomorrow.
Yeah, there's no circuit breakers with crypto. We have circuit breakers in the equity markets, and there's no circuit breakers here.
Right. Yeah. So, yeah, there is some market manipulation. Elon Musk is a big one. There's a great little, like, never mind. There's like a Satoshi Street Bets. If you go on the Reddit right now, the top post is like, it's like a CAPTCHA, like select all the market manipulators. It's just pictures of Elon Musk. But anyways, this is all to say that I think what was fundamentally pushing the market forward, November through basically up until the last couple of weeks, is still intact. Fundamentally nothing really big has changed. But that being said, let's not discount the fact that, yes, it is selling off right now. And yes, it's a significant amount. It's similar to what we saw back in January, where there was a about a $10,000 drop in BTC over the period of about a couple of weeks. And people were asking the same sort of questions that they're asking now. Is the bull market done? Are we going back into a bear market? Are we moving into a period of, this sort of recession or, is crypto just going to go back into another 3-year bear cycle, and we're going to have to wait for crypto to, bounce back? We're going to have to wait for another halving to see BTC go up to, try to beat 60K or something like that. That didn't end up being the case. We were able to get out of that funk pretty quickly. And it's because the things that were pushing BTC down and the crypto market down were just kind of temporary. And I'm seeing the same things here. We are still, I think, very much, at least so far as the Fed keeps printing money, and so far as there's still talks of, they got to keep pushing the economy forward and reopening and all this stuff. So they're still going to entertain stimulus and all this stuff. Crypto's still gonna be right in that battle too. It's still going to be a beneficiary of that. I don't see any logical reason for it to just go back into this oppressive bear cycle while equities bounce back and tech comes back and anything like that. Crypto is right at the forefront of what will be part of how we reopen the economy, and that's innovation. Innovation is going to move us forward. Innovation is going to fix or reopen the economy and help us evolve the economy. It's about that evolutionary aspect as well. So as far as what we're taking from today is, we're just looking at this like how we've looked at every other downturn in the Bitcoin or crypto market. We are of the opinion that time in the market beats timing the market. And that is especially true in the crypto markets, because had you held on through the 3 years of, the last 3 years since the 2017 to 2018, that's where it crashed, and then it was, just going sideways and down for a long time. Had you just held on to that, you had been grossly profitable even today. So, it is definitely, you have to think a little bit longer term. This is not the space to always think about getting rich very quickly, getting rich overnight. That's for a select few people. I think it's much more prescient for us to think about this long-term big picture, where crypto's fitting into that. Take profits where necessary. So don't listen to those people that are saying, just hodl forever, because there are definitely opportunities, very apparent ones, at least as crypto kind of gets more and more part of the mass conversation here, where you should absolutely, if you're doing very well, you're up, a couple thousand or tens of thousands on your position, absolutely take some profit, have some fun with that. Maybe put it back in a little bit, but, wait for the dip, and you'll be much happier as a result, instead of just constantly checking your portfolio every 5 minutes, every day before you go to sleep, whatever, especially during days like today. Just don't even look at it today. That's my other piece of advice for you is don't look at it today, because the thing is, you've neither earned any money nor lost any money if you don't sell. Okay. It should be pretty obvious, but you're seeing a negative number today. That's not realized until you exit that position. And let me put it this way. Like, if you put in money today, are you of the opinion that maybe eventually someday down the road, that money would, have a profit, or would it forever be a loss? Is it only just going to continue to go down towards zero? I don't think so. I don't think crypto is in this sort of, this question anymore of will it ever blow up? Will it ever, be banned or whatever? Yeah, we're going to go through some volatility. We're going to see some countries doing wacky stuff. There's always going to be questions around regulation and adoption and stuff like that. But we're not in this this period anymore where crypto is like fighting for survival. We're fighting for recognition. We're fighting for adoption, yes, but we're not fighting to survive anymore. So I don't see this at any point in the future. These are deflationary assets too. It's only going to continue to go up because there's a limited supply of them, at least for things like Bitcoin. So we're continually fighting over less and less of them. And there's just going to continually be a stronger and stronger narrative as to why Bitcoin's going up rather than Bitcoin's going down. So that's kind of how we're looking at it is, you just kind of have to step back, take a breath. If you're down today, it sucks, but it's going to be okay. Don't listen to the people A lot of the ones on YouTube right now, they're like, oh, here comes the worst Bitcoin bear market ever. This is the worst crash ever. You know, any of that stuff. That's just hyperbole. It's really, it's not helping you. And it's not helping anyone really, but it's certainly not helping you if you take their advice at face value and you sell into panic, because then you're just, you're realizing that loss. And so I just take it for someone who has been through this a couple times now. This is not the worst thing that's ever happened. And we're going to come back from this. And, crypto is still fundamentally very sound. Bitcoin is still fundamentally here to stay. And there's a lot of really exciting things going on this year, still in the books. So yes, we need these forest fires from time to time. We need the ability to say like, yeah, maybe meme coins shouldn't be, all these things that people are talking about. Yeah, maybe NFTs were a little bit overblown. Yeah, maybe there was a lot of these scam coins and rug pulls and all that stuff. Let's, hopefully get rid of those in this little downturn. That's great. We need that. But to conflate that with, oh yeah, and Ethereum and Bitcoin and all these other top 10 coins, well, they're also going to go down and stay down. Those are two different conversations. Those are not the same.
Hey.
Yeah, exactly. We just passed the anniversary of that little conference with Carlos Matos, by the way, BitConnect, if you don't know. So I'm going to get off my little podium here for a little bit and let Doc take over and look at maybe the charting perspective and kind of, hopefully zoom out a little bit and see, give you guys some perspective.
Well, guys, I'm no different from you in that I learned through charts first, but what I had to understand was that to be successful longer term in investing, you have to learn to think differently. And one of the things that people have got going against them right now is think about all the decisions that you make socially right now. When you go to buy something, the first thing you do is to go onto Amazon or some other site like that, and you look at the number of ratings and number of stars. You go onto Yelp and you say, where should I eat today? So you're all based on, your decisions are based on what somebody has done before you. And we're doing the same thing with investing. And so the first thing that you do when you got FUD is you go out to, whatever Discord area or some, you go onto crypto Twitter and you're like, give me information. I want certainty. Somebody tell me what's going on out there. Somebody would tell me what's going to happen tomorrow. And then this just perpetuates because we have this, you can have one person basically saying so you've got thousands of people thinking and doing exactly the same thing. They all panic at the same time. They all panic and buy at the same time. So you've got to think differently when it comes to this. I've just got a couple of slides here for you guys. No real death by PowerPoint, but I want to show you 5 things that will help you get through the next few days here. All right. So how to handle this crash for now. Number 1, understand that no one knows the future. I don't know what's going to happen 5 minutes from now, 5 days from now, 5 years from now. I really don't. I have some thoughts and opinions about what might happen, as do many, many people. But the first thing you need to understand is that nobody knows. So even on the chat here, nobody knows what's going to happen 5 minutes from now. Okay, so you need to learn to think independently. The worst thing a retail trader can do is to lock you in on the outcome proposed by some person that they maybe don't know, but maybe they trust. You inherit a subconscious bias and will freeze or will ignore new information. That's the worst thing you can do. You get tunnel vision. You put the blinders on and you can't see anything like that. And that's the way your brain operates. Learn to think independently regarding your own investments. This will take time. So learn from us. Number 2, follow the price. You can't go wrong if you follow the price. Understand what the price is telling you will override any opinion that you or others have. Believe the price is the final arbiter of value. This is why I don't get caught up in tribalistic discussions about what coin is better than another one. I really don't care. You just look at the price and it'll tell you who's winning the battle. Number 3, define your exits before you enter. Many of you are finding that out today. Like, oh, crap, I didn't expect it to do this, right? The stress you're feeling is from not being prepared for this specific outcome. You did not factor in this specific outcome. Every day you've got to go out there and say, what would I do if the price went up? What would I do if the price went sideways? What would I do if the price goes down? Challenge yourself to think through the different outcomes from this so that you're not displaying or acting on a cognitive bias. Just this one thing alone will separate you from 99.9% of other investors. Most hodlers are not prepared for a crash and will panic sell into the lows. Everybody, while the price is going higher, like, well, what's your strategy? I'm a hodler, so yeah, I'm a hodler. This is great. And then all of a sudden, when stuff goes like this, they're like, well, crap, when should I have sold? Well, wait a minute. You just told me you were a hodler. So this is inconsistent with that. So what I found is that most hodlers are committed as long as the price is going higher. And it's okay, just like what Mav said, it's okay to say, look, if it goes below this level, I'm going to get out, I'm going to book some profits, and I can maybe reload at a lower level or something like that. If it makes sense, if I see the price starting to ascend again, I can always re-enter. You can always do that, but don't lock yourself into one frame of action based on what religion you call yourself, right? I'm a hodler or I'm a trader or whatever. Doesn't matter what you do as long as you're consistent. I would say number 4, also learn volume profile analysis. Some of the people are saying, well, what TA can we use right now to understand what's going on? This is probably the most accurate way of determining support and resistance. And what you're looking for is these volume spikes here. This is where there's more trading. What you find is that when there is a lack of this, and this is my concern, this is right at the swing test of 42,000, there is zero volume here. And that acts as kind of like a black hole. The price will just run right through it. But it will find support at these high volume nodes around in these areas. So watch how the price operates around these high volume nodes, which is volume profile. If you want to know more about it, please reach out to us. We have all kinds of assets and information about this. Okay, number 5, and my last point here. What will the price have to do to create a bottom reversal? Confirm the downtrend. What is happening on the larger time frames, right? So I'm going to do this. I'm just going to jump over here to a chart. We're just going to talk through this for a couple of minutes. Okay, so there's 2 rules that I run off of. There's actually four major rules. You guys might have heard of these before in fractal energy trading. But the first 2 are, if you go through larger time frames like this, larger time frames dominate the trend. So even though all hell's breaking loose today, the trend is still to the upside. And as long as the trend is still to the upside in the larger time frames, you should look at dips like this as an opportunity. That's rule number 1. Rule number 2 is that reversals start from the inside out. If you go down to something like a smaller time frame, we can go down to maybe something like a 12-minute chart, whatever you want to look at, you can start to see some of the reversals already happening at smaller time frames. So if these reversals start to create the price going into an uptrend on here, then this too will propagate into larger time frames. And this is where you can find your reversal. So understanding how to read price action allows you to become independent, allows you to separate emotion from making decisions. And again, it's just part of that discipline where you can, I'll go back here to both of us here. It's part of that discipline where you come prepared to battle every single day, right? Look at this. We're only down 7% now today so far. So the worst may be behind us based on the reversal that we're seeing. So again, use those 5 things. That's not going to happen overnight. You have to learn to think differently if you want to separate yourself from the pack. I hope this helps. It does take a while to learn to think differently and to separate that monkey brain that we all have from making bad decisions for us and learn to be a stone cold killer, right? That's what you want to be, is you want to look at the price action and not have any reaction to it whatsoever. The less that you care about your investments, the less that you care, the more impassive that you are, the better a job that you're going to do about managing your portfolio.
And the better you can see how other people are reacting, take the opposite side of it or play with them on that. Something I've noticed about this, and this is all I'm going to say about Elon Musk, is, what he just tweeted a couple hours ago about like, oh, well, Tesla holders have diamond hands. So he's clearly he's thrown everybody that was supporting him under the bus, at least as far as I'm concerned. And we have to remember, why did people get into Dogecoin? It wasn't because of Elon Musk. He sort of helped that, but it was also because people felt cheated and robbed from the GME and AMC positions on Robinhood, and they're looking for a better vehicle for capital appreciation. And Dogecoin was sort of what they landed on. And
I got into it because the price was heading higher.
Well, yeah,
It's that simple, right?
Yeah.
Look at the price. If the price is heading higher, buy things that are heading higher in price. Sell things that are heading lower in price. Look for ways to accumulate at lower prices. This is the difference between an investor and a trader, though.
Yeah. Yeah. What I saw when people moved from Robinhood to Dogecoin was not greed or fear, but something kind of new, which was anger. And I'm seeing the same thing happen today. People feel very cheated, very backstabbed by Elon. And yeah, it's a little bit childish, but they're going to direct that anger somewhere. And we have to pay attention to where that's going to be. So if we take kind of the backseat approach and just kind of look and see what's going on, and try not to get swept up in the emotions of days like today, we can take a larger strategy and start to play against what the market's doing to itself. And also remember that a lot of these things are still fundamentally sound. A lot of the fundamental reasons behind crypto, why it's grown so much over the past 6 months, especially, but even in the last 10 years, all that stuff is still there. Yes, it's a volatile space. Yes, we're going to go through periods like today. But for those who are veterans of this space, they'll see today as an opportunity, not a catastrophe or anything like that. So hopefully you're starting to gravitate that way. Anyways, guys, we're going to cut it off a little bit early today. We also streamed a little bit early today just to address some of this stuff. So we appreciate you hanging out with us. As always, definitely check out the links in the bio below for some of our resources. Come chat with us on our Discord where we've been talking about this. It's a great place where we try to keep the shilling to a minimum and the high level discussion to a maximum. So, if you're looking for a high quality space, definitely come on board for that. But as always, we appreciate you being a part of the Ready Set Crypto community, hanging out with us on these weekly streams here. And yeah, just hang in there. It's going to be okay. This is what crypto does. It's going to continue to do this. We're going to have great days. We're going to have bad days, but crypto is still here and we're still here too. So just hang in there. It's going to be all right. Doc, you got anything else before we get off?
No, just guys, use this opportunity to think differently. Yeah. Starting today, start to think differently and commit to becoming a more intelligent investor and rely less on other people. That's the way you got to do it.
Those people who went through the 2017 to 2018 crash and lost money probably made money in the last 6 months because they used that as an expensive lesson to rectify their behavior and some of the mistakes that they made. So if you lost money today, use that as an expensive lesson to not make that mistake in the future. And I think you'll be better for it. But anyways, guys, thanks so much for hanging out with us. We'll see you next week. Take care out there. Cheers.
All right. Thanks, everybody. Guys, we'll see you around. Bye now.
Bye.